Thanks for having me here. Let's see how it goes. This is my first time in your group.
Yeah, for sure. I'm doing a lot in the area. This is I've tried more in-person events, and those didn't go well, so that's why I'm trying with online and see how that if that works even better. Um, but
I have to leave by noon time. You said till 12 because
yeah, 10 to 12.
I have to go and see so many houses and go in the market. Usually I have only Saturday. The other days I'm doing other stuff, busy.
Yeah. Yeah. No, it's gonna end up by 12.
All right.
So I wouldn't worry too much.
All right.
We might finish sooner than that, depending on how many people come and all those things.
All right.
It is so this is Zoom. I'm using the free version. After 40 minutes, it will there's like a time limit, so it will shut off. But you can just go once it logs you out, you can just click on the same link.
All right. So you are who's the target today? Like you have realtors coming or lenders? Like Safdar is here. I mean, I don't know who else is coming.
So my goal is to educate people on the investment market in the capital region. So I have lenders that I can connect you with. I'm not targeting realtors, although some realtors have signed up, but they're not my target. My target is you and Marcy.
All right. That's good. And who's Marcy?
What is that?
You said Marcy. Who's Marcy?
Marcy's on the line. She's on the Zoom call.
Good morning. Good morning. Good morning.
All right, I think we can get started. And then as people come rolling in, we can talk to them.
If we were if we all are in Albany or nearby, we could have met on a coffee Starbucks.
Yeah. Well, I've tried doing in-person events before, but they didn't work well.
Recording in progress.
Do you guys mind if I record this?
Yeah, sure, no problem. Whatever you want.
Yeah, that's fine.
You go ahead. मेरी मीटिंग चली चले जाओ यहाँ मैं वो उसमें Zoom है आप you can.
So I want to keep this interactive. So I don't want to keep this as like a formal presentation. So if you guys have any questions, have any concerns, anything, let's keep this interactive, and we can have a more of a discussion.
Yes, that's good.
So this is obviously focused on the Capital Region investment seminar. I have been in real estate for 3 years now, and I have currently 12 properties under contract, all investors, all people that have chosen to work with me to help them find an investment property. And that's been on the sell side, on the buy side, but 12 under contracts right now. So, I mean, why the Capital Region? I mean, obviously, we all know there's strong rental demand, there's, steady job market, but a lot of people don't realize how much growth is actually going to be happening in the next couple years. By 2029, it's expected to grow by 27.5%.
Oh, really? That's very good news.
So it's exponential growth. So even if you buy an investment property today, let's say $300,000 property, it will grow about $60,000 by 2029 and more. So the average home price in this area, 319, 1,500, average two-bedroom rent. Year-over-year appreciation is 9%, and there's still limited inventory right now on the market. And days on market is still 23 days, so it's still pretty low, and property are still moving very quickly right now. I don't know if Mohammed, if you heard, I put 2 properties on the market yesterday. One of them is already on the market, is already under contract.
So when are we allowed to talk in?
Yeah. I want to keep this interactive.
Okay, when you say in 2029 the property will be from 300 to is going to go double.
Yes.
So how do you? I mean, what's the reason? I mean, are the people moving from the New York City, or you see more opportunity like jobs, markets, technology, or other? So what's the reason?
Yeah, a lot of people are coming up from the city.
Okay.
A lot of people from Queens are looking to buy in Schenectady and Albany. Every time I put a home on the market in Schenectady and Albany, somebody from Queens gives me a call. It's like, I want to purchase this property.
Okay.
So there's a lot of people looking to move up here. If they're not looking to move up here, they're looking to invest up here. I have some Queens buyers that are even looking to buy in Troy, Rensselaer County, Cohoes. So a lot of people are just, even though they're looking to stay down there, a lot of people are still looking to invest up here.
Yes, that is true. Because wherever we go, like we are going today, on multiple offers, we see people from Queens, Brooklyn, they come and they have cash in hand.
Yes.
And, before we make an offer on Monday, they already had, it's been gone. So I don't know how to deal that situation.
Well, I mean, obviously, like the people from the city, they, $1 million home is gonna be, 2 bedrooms. $1 million property up here is gonna be, they can buy a $300,000 multifamily and still be able to purchase a regular home up here.
Yes.
So the way you can compete with people with paying with cash is honestly you just have, it's like a numbers game at the end of the day.
Yes.
Sometimes you have to have somebody that's more investor focused, and it doesn't have to be me, but somebody that actually knows how to negotiate, knows how to speak the numbers, knows how to talk, and help you negotiate a good offer.
Yes.
But what I've also found is that if you work with multiple real estate agents, I know a lot of investors or investor focused people, they like to work with multiple real estate agents so then they can develop those relationships. But I found that doesn't always work because they're not going to, those realtors are not going to always bring you the deal because they know that you're going to go with another real estate agent anyways. So at the end, so real estate is a very relationship focused industry. So if you're not developing a good, strong relationship with one specific realtor, it's going to be difficult to get a deal under contract unless it's on market. And you want somebody that's bringing you deals that's not currently on the market. So then you have that exclusive right. I bring a lot of my properties to my clients that are not on the market, and then we talk about the numbers and see if we can get this under contract. So yeah, there's strong appreciation, and it's continuing to go up because of all the people down the city. They're looking to buy up here, and it's only going the market to go. It's only making everything go up, and a lot of the businesses are moving up here.
Saad, when you say capital region, you mean these all towns of Guilderland, Bethlehem,
Yes.
All these. How do you like? If Saratoga comes in town, capital region. Where do you like? Where's the boundary? Which is the end?
So Saratoga, Schenectady, Guilderland,
Okay.
Delmar, Bethlehem, Niskayuna. Those are all capital region.
And what about Catskill?
Catskill would not be in the capital region.
Okay, all right. So that's okay.
Yeah, Catskill would not be in the capital region.
Okay.
The Catskill area, they operate differently from the way.
All right. Let's not focus that. It's fine.
Okay.
Hmm.
So if you look like New York and like the Northeast area is appreciating more than even some of the southern states. So Marcy, I know you mentioned that you have some contacts in Atlanta. I have some contacts down here, and it's even in Georgia. It's a heavy buyer's market down here. So properties are just sitting on the market for days and days on end, and there's low appreciation.
We actually have a couple partners that also are with Red Barn that are down in like Florida and stuff like that. And yeah, they're Virginia, they're struggling a little.
Yeah.
Mm-hmm.
And that's actually why I decided I'm actually in the process of getting my own. I'm getting my Florida license, my real estate Florida license, in because it's a buyer's market. So that way I can work both sides of the spectrum and help more clients.
Yeah. Yep.
So if you see, even in 2021, 2020 and 2021, when it was COVID time, there was a slight decrease, but then it skyrocketed even more. So a lot of people think that the market's going to crash, or they want the interest rates to go down. But if you see, it's only going up, and expected to go up even more. As the saying goes, the best time to buy was yesterday. The second best time is today. So, I mean, market overview, the prime time, obviously, we spoke about that 9% year-over-year appreciation. The multifamily has gone up 28% since 2019, and it's expected to forecasted for continued growth, especially with mortgage rates are sitting easy, and they're not going to continue to change too much. So looking at the inventory demand, we got we spoke about this a little bit, local investors. A lot of people are looking to buy up here. A lot of people from Queens, New York City area are looking to buy because down there, you're not going to cash flow any properties, and it's going to be really difficult. So everyone's looking to buy up here, and that's causing even more demand and everything to go up. So there's 4 types of properties that would work really well up here. 2 to 4 units, mid-size units, 5 to 20 units, student rentals. Like we have a lot of, obviously we're all from the capital region for the most part. There's a lot of multifamily, there's a lot of schools up here. So student rentals should be your big focus, and fix and flip. Like Mohammed, I know you do a lot in, like you have a lot of interest in Niskayuna, Delmar, a lot of those areas, and it's going to be difficult for you to find a property that makes sense because of how much properties appreciate in those areas.
The reason I say is because the families who are looking for moving to buying a property in Bethlehem area or Guilderland or Niskayuna, where the school rating is 10 out of 10, 10 out of 9. You able to, because what I listen from you since we saying is 2029 the property. I want to hold on the properties. In fact, and I have pre-approval. So what I need to do is keep properties and in the right area where I get the rent. where the value goes up, especially the school districts. Although I know what you're saying, even in Amsterdam, if you buy a property right now, in after a while, because there's going to be more opportunities. So the opportunities are all over.
Yeah.
I mean, that's what I know. There's opportunity. It's a huge market. I know what you're saying. That's why I'm attending your call, and I believe in what you say.
Yeah.
And always thanks to you for all you answer my all Q&A, because I'm a beginner, but I love to invest.
Yeah. No, I mean, it really depends where you want to invest, right? Amsterdam is all about cash flow. It's not going to appreciate too much out there.
Yes.
But like, for example, if you invest in Schenectady, it's only a 30-minute drive, yes. But Schenectady has appreciated the most since 2019. Across
Yes.
all the areas, Schenectady has appreciated the most.
Yes, definitely. And there's lots of development in the Niskayuna school district. I see lots of new places. Even there are places, even you can buy property, even buy land. So all this area, the region, Schenectady, Niskayuna, Guilderland, all these, I agree with you. That's why I'm interested in.
Yeah. I mean, I've, like, for example, like there's an off-market property I found in Clifton Park.
Yep.
Clifton Park, yeah, obviously that's a desirable area, but the numbers don't work. It doesn't cash flow.
Yes.
Because the homes are appreciating quite so much that it's going to be very difficult for you to find something. You'll be paying out of pocket at that point. So that's why it's always better to go in Troy, Schenectady, Albany areas.
Okay.
And focus on, you have to know like the specific neighborhoods and what's going on in those neighborhoods, which neighborhoods is actually good and which ones you should kind of avoid.
But we are concerned about if we have to buy property to hold on to rent it for a few years. So in these areas, there's an issue with rent, the tenant. In the area where the school districts are better, there is a more chance of getting a better rent and more stability. That's why I was talking to you about those regions like school districts.
Yeah, no, I understand what you're saying. If you have a tenant, you can always verify them, right? So you want to look at the rent rolls. Are they paying on time? You want to look at the leases, and then you can even go, if you really want to, you can even go look at it and make sure that everything is in good shape. But I advise all of my clients you don't need to go look at it because you're already getting an inspection done. So if you're going and get an inspection done, you're already verifying that's in good shape, that everything's being taken care of. You're checking off all the boxes to make sure everything's in good shape. So it's not always about the location. Yes, the location matters a lot, but you want to look at what is going on with the leases and rent rolls. So then you can verify, okay, they're all paying on time. Make sense?
Yeah, I'm listening.
Okay.
Hey, it's Marcy. Do you have any feedback on Gloversville area?
Gloversville, I don't go that I haven't sold a property out in Gloversville. I sold one out in Johnstown and Amsterdam.
Yeah, we just happened to stumble upon a single family that we looked at yesterday that we're thinking about picking up and just renting it, just holding it and renting it. But I wasn't sure. We just started looking at comps and rents in the area. I mean, for what we're going to pick it up for, it seems kind of logical. But I was just curious if you had any particular information on Gloversville or experience in that area.
Well, it depends, right? What are you looking to accomplish? What's important to you when you buy a multifamily? Is it cash flow? Is it appreciation? Is it tax benefits?
Cash flow.
Yeah, so it probably does cash flow out there, right?
Yeah.
But you're not going to get too much appreciation when you do plan to sell it sometime in the future.
Yeah.
But
okay.
As long as you maximize the tax benefits, write off all the mortgage interest. You can write off the taxes. You can depreciate the property even over 1 year by cost-segregated analysis. And then doing all those things, you should be able to still make good money off that.
Yeah. Okay.
I can say something. For Gloversville and Johnstown, my experience is that many companies, when somebody, let's say somebody has to live there, they have to find a job there, and most of the jobs are per diem or 1099 contracts, or some builders are buying properties. In Troy, Albany, what Saad's saying, in Capital Region, there's an opportunity in different areas. If somebody leaves, somebody else come. So for a person like me who has to invest, I would never invest in Johnstown and Gloversville, even Watertown, those areas, because I will always invest in areas where you get not only return for your money, but you get a rental substitute. Where in Gloversville, if somebody loses a job and then they have, because these are temporary contract jobs, if you go, because it's all health sector, smaller jobs. So that's another concern there.
No, that's a very good point, Mohammed. That's a very good point. That if it's not appreciating too much either, it can be okay, but it might not be the best decision.
I've seen people losing money, or people because the issue is not to buy property. Let's say you are in Amsterdam or you're in Gloversville, you buy property, you have a job there. And then, God forbid, what sort of job is there? Let's say, what is there? Health sector, few assistant living, some mental institution. There's a correction facility in Amsterdam. So what else? There's nothing. So what happens is that if you lose that job, or if you go to another job, because they are like short faces, always buy a property near Capital Region or mid Hudson region, where there's an opportunity, like near Poughkeepsie, Brewster, or this area, Capital Region, because you have opportunity. If somebody leaves, there's another person coming in. That's why I always like to stay near this Capital Region. Going into Brewster, going into these Gloversville and far more places is going to be, for me, is a risky. Maybe if you have 100 properties, it may not be.
No, that's a very good point. I appreciate that insight.
Thank you. You're welcome.
Yeah, so these are 3 of the properties I've recently done. 3 of them are 2 of these. The Schenectady duplex is the Schenectady duplex that I put under contract in Schenectady. This was an 8-bedroom, 2-bath. My buyer is purchasing this for $130,000. So it can be rented out for about $3,600 a month. So and this is actually going to be a flip. So what he's doing is that he's just going to be purchasing it, renovating it, and putting this back on the market. There was a lot of things that went wrong with this property. For example, like there was a title issue. My client in the past was fixing a property and had another property. The tenant sued them, and now it's like this entire mess. So because she was buying her own name, I learned so much just making sure that all my clients buy with an LLC rather than in their own primary name. Also did a Schenectady flip where my client put up $40,000, financed $40,000, and then sold it for $270,000. So he made about $190,000.
Well, nice, very nice.
And then there's another duplex I have under contract right now. It was sold in 2 days. It's went under contract for $345,000, and the rents would be about $2,800 per month. So there's different types of loans you want to be using depending on your investment strategy. If you're focusing on multifamily, I would recommend just going with a DSCR loan, because all they're doing is looking at your credit. They're not going to be they're not going to be looking at your financials and things like that like they would on a conventional loan. So a DSCR loan would probably make the most sense. Or you can do, obviously, creative financings, seller financing, subject to deals. I'm working on a subject to deal, a 17-plex out in Kingston, where it's worth where $1 million is like an assumable loan. So my client is looking to assume the property and then finance the remaining amount. So even at like those bigger deals, those opportunities are still available.
Hey, it's Aaron. I'm Marcy's partner. I just have a question for you.
Yeah, what's up?
So where do you generally source your leads from? Is it just like MLS or is it something like that?
So when you're in what perspective are you saying? Like if I'm looking for a property for my buyer?
Yeah, well, even for that, or if like for yourself, if it's something you don't mind sharing, like, you know, we get our leads dropped in from our franchise, but we also self-source through like preforeclosure.com or Zillow or, you know, stuff like that. But we're not licensed realtors, so we don't have access to the MLS. We're kind of finding that a lot of the good deals, as far as what we do, kind of come from the MLS. Is that somewhere that you like to source primarily, or do you have specific places that you source for good leads?
Yeah, so I look all over. So I source them from the MLS. I think a lot of the industry they talk about is like, oh, you should look off market, and that's true in some perspective, but you can find good opportunities on the MLS. Like it's not like you can't. Obviously, so upstate New York is in a seller's market, so a lot of the properties are still moving pretty quickly. However, you can still find opportunities. I send a lot of my clients properties that are on the market. However, I do source a lot of my leads from absentee owners. Honestly, absentee owners is what I'm mainly focusing on right now. I haven't found too much success with pre-foreclosures and those things, code violations and things like that. Absentee owners is where I've been finding a lot of success.
Awesome. Okay. Yeah, I was just curious.
Does that answer your question?
Yeah, absolutely. I was just curious, just because like in that last slide you said that you had that one duplex selling for 130, and that's actually that's a good deal. Yeah, that's a good deal, because like a lot of the stuff we're coming across when we try to get it for, you know, 70, 80, 90,000, 100,000 to try to rehab and redo it, we're coming up with sellers that want market value for their properties. But I'm wondering if it's just where we're sourcing our leads, you know?
Yeah, no, you can. Are you looking for more multifamily? You're specifically looking for multifamilies, correct? Like renovated.
Yeah, I mean, we do a little bit of everything. So like we wholesale, we want to get into fix and flip and rentals to hold, stuff like that. But it's just been really tough to find those right deals, obviously, because you can't buy something that needs work for, you know, full value, but you also can't buy a flip for full value of what the property's worth. So we're just trying to find somewhere, someone, some way where we can kind of get access to leads that are in that area.
Sure. And Marcy said that you guys are open to turnkey as well, right?
Yeah. Yeah. Yep.
Yeah. So then I would recommend absentee owners.
Okay.
Absentee owner, because a lot of those absentee owners, and this is why I focus on them, is I help them understand why they can use their equity to buy bigger properties. So, for example, if they have $200,000 in equity available, they can go and put that, use 10 to 15% down. Because I have lenders that would go as low as 10% or even 15% on a down payment. So with that, they were able to purchase even upwards like $1 million, even $2 million would be would be too high, but like $1 million would probably be the highest that they would be able to go. So with that, they can appreciate more, they can cash flow more, and I really go down to the numbers and help them understand what they're actually losing. So that's how I usually break things down, and absentee owners is where I've been finding the most success.
Okay, I appreciate that.
Yep.
Thank you.
So cash flow analysis, right? A lot of investors and all those things, like they focus a lot on the cap rate, like 12% cap rate, 13% cap rate, and that can be okay, right? But you can have a high cap rate, but then you're still cash flow negative. Cash flow, for those that don't understand, cap rate is your net operating income divided by the purchase price. So net operating income is your rental income minus your expenses, but it's before your mortgage payment. Cash flow is...
I have an issue with cap rate in this region because I couldn't find 80, 90 units. I was looking for 80, 90 units for cap rate. Well, then somebody says 8%, between 8 and 12% you'll find, but you can find them in New Haven, Connecticut side, the other places. It's very hard to find 12% here, like you're saying.
No, I've seen properties that have a higher cap rate. But you have to focus on cash flow, right? Because if you're cash flowing about 500 to 1,000 a month, it's a good deal.
I don't want to have like only 1 or 2 units. I was looking for 90, 80 units because we were comparing it with Kissimmee and Orlando property. So their cap rate, the same 12% is a lot cap rate, but the properties are so high. So everyone is jumping towards this area, especially New Haven, Connecticut, Danbury, Brewster side. But I was trying to bring them here, this capital region. So I couldn't find it. If you find it, it will be blessing for me.
Yeah. No, I mean, if I find something, I'll send it to you.
Yeah.
But what I am saying is that cap rate can vary so much. Mm-hmm. Cash flow can give you a specific number. So obviously, I understand you're looking at more than 1 to 2 units. But if you can cash flow 500 to 1,000 per unit, you're going to be left with it's a good deal. But you're not gonna become rich just off cash flow. You have to utilize all the aspects of real estate investing, like tax benefits, appreciation, all those things, to really make money off real estate investing.
Thank you.
So that's the last step. Do you guys have any questions, concerns? We can open that up more and speak about specific properties I have or any of that. Or if you guys don't have any...
How do you compare the condos? Because I had few condos and I was working on renting them rather than, like you said, don't sell anything. And especially this, where my location is near the Crossgate Mall, where everything is construction going on. You see lots of, so there is one condo and there are a few more condos available. But I see them hard to sell because this is the market. If you buy even a condo, but the HOA comes. And then I thought that rather than spending $230,000-$40,000 for one condo and paying $340,000 plus, the mortgage payment will be $2,420, including HOAs, rather $2,400-$2,500. So I thought maybe I should buy. If I have to pay $2,400 per month, why not I get $350 like by independent house rather than condo? But eventually the condos rental is far better. Is it true? What do you suggest?
Well, I mean, Mohammed, if you have a tenant in a condo, how much risk are you opening yourself up to?
I'm sorry, can you repeat?
How much risk?
Yeah, I don't see much risk here because because I see the rent here and like $2,700 for 4-bedroom. It's a 4-bedroom condo. Some are 3 bedrooms, so I can buy more condos. But my question was that And I don't want to sell it at the moment. Like you said, agreed, 100% that keep the property, rent it, keep it for a long period, and you will see a change. So this was also, you were also talking about condos or just houses? You said is going to jump prices. Because a different
So
market for
the
condos
Zoom,
and towns.
not to cut you off, Mohammed, the Zoom is about to log out. So just click out us and then hop back in, and then we can continue that discussion.
Okay. All right. We got it.
Yeah, so you were saying, so with condos, Mohammed, can you hear me?
Yeah, I can hear you.
Yeah, so with condos, they're not going to appreciate that much, right? So you have to look at the appreciation scale. Is a $300,000 condo going to appreciate as much as a $400,000 multifamily? Am I making sense? Did you hear me?
Yeah. I was not. I was not sure whether I'm not. Like I just bought it for last. It's been like it's the second year. I don't want to sell it at the moment. I'm keeping. Number one is whatever I'm buying now. I'm not selling anything.
Yeah.
Either I'm going to put it on. Either I'm going to rent it.
Yeah.
Or either I'm going to, like you said, flipping is different. Like if I buy some property and for 3-4 months, that's another issue. But if I buy property, I'm going to keep it or rent it. So at the moment, I'm just waiting for that. Hold on to properties.
And that's what you should be doing.
Yes.
But what I'm saying is that if you have, let's say, 4 units, if one or two tenants move out, are you still paying off your mortgage?
It all depends. If I had like PMI, I paid PMI, or it all depends how much is like if 2,000, how much is balance.
But what I'm saying is that most likely, if you buy let's say if you buy a good multifamily 4-unit, most likely if it's a good property, two tenants should be paying off your mortgage. If one or two tenants move out, you'll still at least be able to pay off your mortgage.
Yeah, but
on a condo, it's not going to appreciate that much, and if that one tenant moves out, you're still paying that mortgage out of pocket.
Yeah, but I'm looking at it with a different aspect. I'm not going into 4-unit because I feel very uncomfortable having 4 different tenants, and I'm more interested in single family where there is a need for improvement, where I rent a property or I move in and then rent it to one family. Like I said, explained it in a nicer location, in a nicer school district. I mean, this is my first goal because I'm a beginner. Maybe later on, what you're saying, I'll go into multiple once I've experienced, once I have some more assurance, because I'm really uncomfortable, especially in Troy and these areas. Some areas I'm not very comfortable. I've seen people lose money.
Yeah, you can lose money in any area. But ultimately, it comes down to what the deal is. What is the deal in the property, right? So you can lose money in the schuna, right? So it comes down to what's the deal. what is the opportunity? Did you do all your entire due diligence on the property rather than just focusing on the location itself? Like, for example, in Troy, Lansingburg area is a very good area.
Yes, I know. Yep, agree.
So, and you can find really good deals out there.
Yes. Albany, Troy, Schenectady have very good areas. I agree. They're all three. Even I consider these places which I keep writing, and you also with me on Facebook. They are part of Albany. I mean, even Guilderland, some part are like Western Avenue. Some places are like they are like suburbs of them. So that's the area is a part of.
Yeah.
I agree.
So.
All right. Thank you for your time. I don't know other people are. I have no other question. But whenever I'll bother you, or maybe we'll have lunch together sometime, discussion.
Oh, absolutely. Yeah, feel free to message me
people.
with any questions.
You're like my son's age, very inspiring young.
I appreciate it.
Can you share your contact information again with us?
Yes.
Sorry.
Cell phone is the best way to get in contact with me. But this is my email as well.
348-9535.
And Saad, how to deal with these open houses where you go and you have multiple offers, and then they tell you, the real estate agent with a nice face say, oh, okay, you give there are multiple offers. They don't tell you it's the price was 250, but I mean you don't. I don't know 320. What's the final price? And we are like clueless. What we gonna say?
What
offer? It's like they have like maybe they put it in a lower price and have a staging, and then they ask you to come, and when you see it, and then they say the multiple offers, and we don't know what to offer. It's very confusing for me.
So that's why you need an agent that can actually help you get the agent to open up and and get the you kind of have to butter up the agent, help them understand, and then you they eventually open up and say, like, okay, this is the offer. This is what the price. But as an investor, you're gonna have a very difficult time finding a single family property that's good for investment, because you're gonna be as an investor, more than likely you're gonna offer on the lower end of a single family offer. Your offer is going to be on the lower end, but there's other buyers coming in. They're looking to live there, so then they can go higher. If you're a seller, they're going to take the highest offer. They're not going to take your offer.
Yes. So maybe I should look for some property with, like I said, field inspection, red flags, and invest in that. Put some $50,000-$100,000 and then sell it.
You can. That's an option, but more than likely, because every seller is going to 99% of sellers are going to want the most money for the property.
Yes.
So you can go and offer them, like, okay, this is the offer I have, but more than likely they're going to want to put it on the market and get the most money.
Yep. All right. Thank you.
Okay. Marcy, do you have any other questions, concerns?
No, I appreciate your contact information. We're going to talk together about maybe talking with you a little more about these turnkeys in Troy.
Yeah, give me a call.
We're just working on these this Gloversville one as well, and it's just a good price, we think. So we're working on comps and stuff now. So and I know there's the hospitals out there. There's Nathan Latour and St. Mary's and some other stuff. So I know like the traveling nurse thing that's really huge right now.
Yep.
Yeah, we're going to kick a few things around, but thank you very much. This was very informative. We appreciate it.
No problem at all. Thank you so much for your time.
Thank you.
Mark. Thank you. Nice talking to you, Mark.
Nice, thank you.
Bye-bye.
Bye-bye.
You too. Take care.
Take
Bye-bye.
care. Bye-bye. Bye-bye.
So I just finished my investment seminar. It lasted for about 45 minutes. And from start to finish, from 10 a.m. to 10:45, I had a slide deck that I went through, talking about different deals. I didn't want to get too much in the weeds. Spoke a little bit about the market, what I'm doing, what deals I have done, talking about fix and flip, cash flow appreciation. It was pretty high level.
Got it. Sounds like you kept it concise and focused on the bigger picture rather than bogging people down with details. That's a forward-thinking way to do it. And it definitely keeps the audience engaged. Respectful to the point,